Welcome back to FTFM. I'm joined by Hugh Hendry, founding partner of Eclectica Asset Management. Thanks for joining us, Hugh.
Thank you.
I think one of the themes that you're looking at in your investment portfolios at the moment is the breakup of the Eurozone. Do you see that as a likely happening?
I fear so. I fear it's becoming more likely. And the analogy that I draw is that Europe, and particularly within Europe, the countries that are known collectively as the pigs, Portugal, Italy, Ireland, Greece and Spain, seem to resemble the British economy around about the 1920s, when we wanted to get back to the pre-war gold standard. Now, prices had risen in the intervening period. We'd had inflation with the war. How did we get back? And in Britain, we adopted the hair shirt mentality that we would lower domestic prices, i.e. wages would have to fall. And we succeeded, but heavens, we took ourselves close to anarchy, and we had the general strike and everything else, but we succeeded. And that's where we are with regard to the pigs. We require a process of re-establishing what we call equilibrium. What do I mean? I mean that they run these chronic deficits. They are uncompetitive. There are two ways of resolving that. Either domestic prices can fall, or the external price, i.e. the currency, falls. And the second is a lot easier to achieve, typically, except we have the euro. Okay? We don't have lira, we don't have drachma, we don't have peseta, and that is the problem. It means that the force of returning us to the norm is that prices have to fall. Spanish workers, Greek workers have to take price or wage reductions, and society doesn't vote for that. So we're getting tension, which the Greek rioting before Christmas, and indeed this escalation of businessmen being kidnapped in Greece, that is just one measure of that tension and that radicalisation of society coming to the surface.
So if we don't go for the breakup of the euro, if Greece can't pull itself out of the euro, it might see rising social tension and we will eventually get more rioting, you think?
Well, it is. The tension is a reality. It is happening today, or certainly in December. At the same time, in my world, people are now seriously considering the notion of a default within Europe. We got close with regard to Iceland. That was uncomfortably close to the core of Europe. But Greece, and the way that we're pricing the sovereign CDS, so the credit, if you will, the price of credit, government credit within places like Greece, it's now at elevated levels where people are actually paying money today to protect themselves in the event of such an occurrence.
Are there any other areas of the world that you think people are thinking about in a certain way? Because we've had quite a lot of comments saying, no, the euro can't possibly fall apart. But where your view is, actually, it might go quite the opposite way. I mean, China is one we've
Absolutely.
talked about.
But I think what I'd rather say is, what would cause the greatest consternation at the end of the year? And there are at least 4 or 5 things that come to mind. China, you mentioned. If the Chinese economy contracted, oh my goodness, yeah, that would be a serious spanner in the works. If the dollar continued to appreciate, if we saw parity with the euro, my goodness, that would be deemed to be unthinkable. If government bond markets continue to outperform, gee, that would really, really great, yeah? And all of that's tied into this presumption that quantitative easing, which we've embarked on now in the US and the UK, will succeed. So my 5th point to you is, what if it doesn't succeed? Because there's no precedent of it ever succeeding.
And that's just printing money, essentially.
We've come to a moment in time, a profound moment in time, when debt levels versus the size of the economy have never been at this level. This is why we're vulnerable as a society. So you've got that going on. So I suspect that quantitative easing, if it works, doesn't work this year, and that we have another profoundly deflationary period. And in that event, China, with all this productive capacity serving the US economy, has difficulties. And risk-averse strategies pay off, so government bonds improve. And the dollar rallies because I want to tell you that there is a shortage of dollars. Now, people think I'm crazy. A shortage of dollars? How is that? They're printing dollars. They're not printing billions of dollars. They're printing trillions of dollars. But keep in mind that America has $50 trillion of debt outstanding. And that was fine because they thought they had $50 trillion of assets, mortgages. the stock market, etc. And what we're discovering is these asset prices deflate. It's the vaporization. I was asked yesterday, what happened to the money that the British government put in? They put 38 billion into the banking sector. Did it go to hedge funds? And I searched my pockets. It didn't go into my pockets. It vaporized. Yeah, that's where we are.
Okay, so you're looking to make money on these trends, as it were, by betting against what the consensus thinks.
First and foremost, I'm looking not to lose money. Yeah. Secondly, I say to myself, the odd thing is we've set up this. We've postulated that if government bonds outperform, and what I didn't say is if gold falls in dollar terms, and if the dollar continues to rise, then that would be contrarian. And yet, the prevailing trend is in that direction. So the consensus is contrarian. I'm actually, if you will, I'm Mr. Market. I'm Mr. Momentum. I'm going where the market's taking me.
But
Everyone
nobody else wants to go there.
They don't, because they have an emotional or an intellectual prejudice which prevents them.
And finally, Hugh, I just want to ask about hedge funds and how they can help themselves and communicate perhaps a bit better. They've come under a lot of pressure. Obviously, we've had the short selling ban that has just come off recently, but I think a lot of people still don't really understand why people think it's okay to benefit from a fall in a company's price. I mean, can you put it in a way that people can understand?
My take on the positive role of hedge fund managers is that we seek to act as this sharp pencil aimed at the spine of the board of directors, the most powerful members of the community. How does an employee speak up? How do you challenge? And what if they got it wrong? Yeah, the politicians are not going to help you. And I'm not saying, hey, I'm some social savior, but at least I'm the kid that says the emperor is naked, and I risk my own money to say, I think you're wrong. And we were right to raise the stakes with the banks because they were wrong, and hence the mess that we have today.
All right. Thank you very much indeed, Hugh Hendry.
Thank you.